Hello friends, welcome to today's show. Today, before we start, I want to ask you one question. If one day all your money, your bank accounts, even the small interest you keep overseas, suddenly gets checked and you have to pay a huge amount of tax, what would you do? This is not a what if. This is really happening right now. Recently, something very strange and scary is going on in China at 4 o'clock in the morning. The line outside the Shanghai exit entry administration is already super long, reaching all the way to the road. Rich people in Beijing are quietly leaving the country. Even their neighbors don't know they have moved away. Houses in London, Singapore, and Sydney are being bought up super fast by Chinese buyers. And all of this started because of tax checking. They are not checking big companies or super rich people only. They are checking normal people, middle class people, people like you who thought, my little overseas investment is safe. They check the few $1,000s you made from US stocks, the interest in your Hong Kong account, everything. Big online shopping platforms like Amazon, Alibaba, Temu, Shein all got called in to hand over their sales data. As soon as the data matches any tax you didn't pay before, you have to pay it all back now. You may have to pay 13% VAT personal or company income tax, the fines, up to 5 times the tax. The scariest part is, this time it's not only the super rich with tens of millions. Even normal people with less than 1 million US dollars in total assets, people who just bought a few US or Hong Kong stocks, are now getting phone calls from the tax office. Someone said it very clearly, the government is out of money. Now whoever has money gets checked. Money feels danger faster than people do. Rich people in Shanghai line up at the passport office until the line reaches the street. Middle-class families in Beijing quietly leave one by one. Neighbors have no idea they are gone. Real estate agents in England say, recently everyone who comes to see £30 million houses is Chinese. Property sales in the best parts of Singapore hit a 2-year high. Australian media reported that buyers from Guangdong spent 37 million US dollars on houses in just 1 year. You think they are investing? No, they are escaping. Because everyone is asking the same question, is this tax checking only short-term, or will it become long-term capital control? Is this just a policy change, or is the countdown to leaving already started? When overseas accounts are checked, overseas income can't hide anymore, rich people are running faster, middle-class people are starting to panic. This big show called, Where is the Money Running?, has only just begun. If you care about this topic, please subscribe to my channel and turn on the little bell. Choose ALV, so you won't miss future videos. 5 cross-border online sellers are being watched closely in recent years. All levels of Chinese government have tried many ways to help the economy, but their money bags are getting thinner and thinner. So the tax offices have to find new ways to get money. This time, they are looking at online sellers. According to Bloomberg News, people who know the inside story say China's tax departments have started to ask big online shopping companies like Alibaba, Amazon, Shein, etc. to hand over all sales data. The goal is to catch sellers who use these platforms to hide tax. Amazon started giving data in mid-October. Alibaba's AliExpress, Temu, Shein, and other Chinese platforms also received notices a few weeks ago and are handing over data now. The tax offices say the platforms themselves did nothing wrong. With this data, tax offices can see the real sales of overseas online shops. These real numbers are often much higher than what the sellers told the tax office before. Once the sellers fix their reports, they may have to pay back up to 13% VAT, so company income tax. For many small and medium sellers, this extra tax can eat up most or all of their profit. This action shows how much Beijing needs money right now. According to the Ministry of Finance, in 2024 the country's normal income grew only about 1.3%, much slower than spending. Local governments everywhere don't have enough money coming in. The property market is still bad, land sales dropped a lot, so the money local governments used to depend on is almost gone. Even though the central government gave 10 trillion RMB to help local governments, it's still not enough. So local tax offices have to find money themselves by checking taxes harder. In fact, Bloomberg already reported in June this year that the Chinese government is checking taxes much harder, not only checking Chinese people's overseas income, but also using CRS, a common reporting standard, to stop money from running away. Asking online platforms to share data this time is just the next step of this big tax war. CRS is simple. Countries share bank account information with each other. No matter where you live now, as long as China still thinks you are a China tax resident, your US stock profits, Hong Kong property income, even the tiny interest sitting quietly in an overseas bank account, in theory China tax office can see it, ask you to report it, pay tax, and pay fines if you didn't report before. The key point this time, it's not only billionaires. Many normal people with less than 1 million US dollars total who just bought some US Or Hong Kong stocks are now getting calls or letters from the tax office. Why is China checking taxes so hard lately? One sentence: they have no money. In the past few years, China's economy had the 25 GDP is expected to grow only 4.5%. House prices keep falling. Even luxury homes in Shanghai dropped 30-50%. At the same time, the government still has to spend huge money on roads, bridges, subsidies, and keeping people employed. Result: the budget deficit jumped more than 50%. Local debt is like a mountain. Local governments used to live by selling land. Now they can't sell land anymore, so they look at another big piece of meat: overseas assets and investment income. Goldman Sachs says Chinese people hold about $370 billion in US stocks and $1.3 trillion in US bonds. If the tax office can bring back tax from these, it's a huge amount of money. So from March to June 2025, Hubei, Shanghai, Zhejiang, and Shandong provinces started first. They use CRS to find middle-class people who have overseas accounts or income. Tax rate is 20%. If you didn't report, fine is 5 times the tax to 0.05% late fee every day. This is real. In Shanghai, one investor had to pay 1.26 million RMB in tax and fines because he didn't report US stock profits. Bloomberg said it very straight. This is not some new smart policy. This is just because the government is broke. As China's politics and economy get tighter and Western countries put more pressure on China, a never-before-seen rich people exodus is happening. Before, people wanted to leave because of crazy competition, unemployment, falling house prices. Now this new tax policy is like pouring oil on fire. According to the latest report from Henry & Partners, a company that helps rich people move. In 2024, about 15,000 Chinese people with at least $1 million they can move left China forever and took their money with them. That's 1,400 more than 2023, a new record. China has been the #1 country losing millionaires for 3 years in a row. Each person takes away about $6.6 million on average. Just in 2022 and 2023, total money that left was $160 billion. In 2025, the number is expected to grow another 10-15%. When taxes get tight and people lose trust, the ones with money always run first. Starting 2024, rich people leaving Shanghai became a big phenomenon. Shanghai has 20-25% of all China's rich people, so every year about 750 rich Shanghai people leave. Their favorite places Europe's, especially Spain, Portugal, Japan, and Turkey. In the first half of 2025 alone, more than 5,000 investment immigration applications came from Shanghai, taking away $10-15 billion. At the Shanghai passport office, super long lines have become normal. Some people start lining up before the sky gets light. Every family is preparing to go abroad. That scene looks a bit like people rushing to travel after COVID, but this time they are taking away money and their hearts. Some people say almost all the rich people in Shanghai are gone. Even the government didn't expect so many people to leave. Why Spain? Because life inside China is too stressful. The economy is still trying to find its way. Many middle class and rich people want a new start for themselves and their children. According to Japan immigration data, by June 2023, already 760,000 Chinese people moved to Japan, many from Shanghai. Why Japan's have permanent ownership, no public area cheating, foreigners can buy easily. Spend only 2 to 50,000 Japanese yen to open a small company and get a business manager visa. Then kids go to school free, adults get 70% medical coverage, and you can keep Chinese passport. Best deal. Some choose Turkey because for the price of one house, the whole family gets European-style citizenship that passes to children forever. If Shanghai rich people are running away loudly, Beijing 24 to 2025, more than 4,000 investment immigration visas from Beijing, money leaving about $15-20 billion per year. Numbers similar to Shanghai, but the style is totally different. On the surface, both are pushed by bad economy and stress, but Beijing people leave more calmly and with clear plans. Here, immigration is not for fast money. It's a safety escape. Most middle-class families take their kids and go to England, Ireland, or Malta. They want to escape the super hard Gaokao exam. Once the child has residence there, they can go to local public schools for free. After graduation, they can try Oxford or Cambridge, or come back to China and take the much easier overseas Chinese student exam, so only need 4 to 30 points to get into good universities. For many Beijing government workers, professors, state company bosses, this is not crazy, it's smart planning, leaving a safe road for the child in the future. They don't line up all night like in Shanghai. Everything is low-key. Money moves out slowly, usually in safe forms, and the amount each person takes is often higher than Shanghai people. 2 cities, 2 styles of leaving. One is hot and noisy escape, one is cold and quiet retreat. But the reason is the same: when trust is gone, danger is rising, future is not clear, immigration becomes the last thing that feels safe. In the past few years, China's super rich people are speeding up moving their money and their future outside the border. Latest data shows Chinese buyers are still one of the biggest groups buying houses all over the world. Sales are quietly going up in England, Singapore, Australia. In London, a big property company sales manager, Ms. Liu, told reporters, in the past 2 years, more and more Chinese buyers come to see London homes and commercial buildings. Some look at houses over £2 million. Some bank presidents or company bosses directly ask about big villas. Public UK data shows in the past year, many houses in the best parts of London, £10–30 million, were bought by Chinese people, usually through offshore companies or family trusts, so names stay secret. Daily Mail reported a property in Mayfair sold for £28 million between 2024–2025, buyer from coastal China, done through offshore structure. Financially said Jack Ma's wife, Zhang Ying, bought a London property in autumn 2024 for £19.5 million, about 176 million RMB. Caused big attention because of who she is. In Singapore, first quarter 2025 data shows foreign buyers, mostly Chinese, reached a 2-year high in the best areas. Even after the government raised extra tax for foreigners, many Chinese buyers pay 100% cash at once. Australia is the same. Media said one Guangdong buyer spent over $37 million on Sydney properties. Agents say Chinese buyers want houses they can keep forever. From London to Singapore to Sydney, these buys are not just for profit anymore. They are for safety, spreading risk, and finding peace of mind. Friends, when online sellers' accounts are checked, overseas income is chased, rich people run faster, normal people start to shake. This big show, where is the money going, has only just started. Some move their money away, some send their kids away, some pull themselves out completely. But the question left behind is, when capital, talent, and trust all leave at the same time, who will fill the empty future? If one day checking tax, limiting money, blocking roads out becomes normal, will you stay, or will you also prepare your backup plan? Welcome everyone to share your thoughts in the comments! Don't forget to like, subscribe, and turn on the bell. See you next time!